very good morning to all our viewers who are joining us live here on this broadcast at Moneycontrol. You're watching Opening Bell with me, Stacy Pereira. And a quick recap of what we left off yesterday. We are seeing some good positive momentum all through the week. We could say midweek too, we managed to get on to those 24,700 levels. And from there, whether now we can get to those 850 levels is what experts are really putting it at. That being that new resistance that we're going to try and conquer perhaps in today's session, because the handover that we're getting is quite positive, one would say, especially from what we're getting to hear from the Fed minutes of their July meeting, where they have indicated that yes, a rate cut is pretty much on their September plan, or at least that indication that there is the hopes of one, and that is perhaps what has got all the indices globally quite propped up, we would say, this morning. Most of your Asian markets also trading the positive. So let's get you all of those cues and also all of your queries that we'll try and get answered to the course of the show with our experts. But before that, let me take you through all the top headlines. Now, Wall Street has been rallying. The S&P 500 and the Nasdaq both posted their 9th winning session out of 10. Now, minutes from the US Fed's June meeting suggest that a majority of the policymakers believe that it will be appropriate to cut rates in September if the data trends remain similar. And stocks in the Asia-Pacific region are also trading in a mixed range, we could say, this morning. The Bank of Korea has decided to hold its rates at 3.5%, while the PMI data for India as well as Japan and Australia will be released later today. The Bank Nifty currently is suggesting a higher start for the Indian equity market. And crude prices continue to dip. Brent crude now trades somewhere around $76 a barrel, even as the US crude inventories have fallen as the government has revised its key jobs data lower. Gold prices, on the other hand, hover near a record high after the Fed minutes suggest that impending rate cut in September. And Zomato has gone on to acquire PayTM's ticketing business for a little over 2,000 crore rupees, as Zomato looks to add movies, sports, ticketing, live performances, shopping and other services into its portfolio. Going Out will be the third largest B2C business emerging out of Zomato. Well, that deal is something that is really going to be, watched out quite closely for both the parties. These are two startups that we saw get listed, and then we've been seeing their trajectory, if it's Zomato and the turnaround story that we did see there, or the regulatory overhaul that PayTM has seen and how it has been trying to, move past it and overcome that. And this being one of the steps where they decided to hive off the entertainment and ticketing business, and now it is none other than Zomato that has decided to take that up. So we will be seeing how brokerages too have placed this whole deal. It is a positive for what Zomato stands to gain from this, but also of how PayTM will look to, then clean its books through all of this. But if you have to look at the broader markets and where we left off, well, it does seem we closed at a high, the day's high yesterday. So 24,700 levels is where we shut shop, 770 to be precise. The Bank Nifty, though, did see some bit of swing. So we did start on the positive for the Bank Nifty, but tad bit lower, that we ended in the red, slipping by about 118 points to close at that 50,686 levels for the Bank Nifty. So we are targeting a 51,000 level for the Bank Nifty. If it manages that, it would be an interesting space to see, because many had kept that as the levels to be watching out for the Bank Nifty particularly. Now, if you look at the stocks, we did see the insurance stocks do quite a bit of a flip-flop, where there's continued buying interest now in the likes of an SBI Life or an HDFC Life, somewhere close to 5 to 6% that it has gained in just the last 3 days. And the other stock that was quite the outlier yesterday was Nykaa. That one hit a 52-week high, ending with close, intraday somewhere around 20% that it saw, but ending the day with about 10% gains. So overall, there was a good momentum. We saw the market breadth remaining in favor of the advances, with the advance decline ratio as 2:1. We could say an up move could happen, but it might be slow, and we could encounter those intraday pullbacks. That is something that also can be anticipated in trade today. Also, being the weekly expiry for the Nifty is something that people will want to change their positions with. But if you look at the option queues, then your PCR also somewhere has fallen to around 1.24 versus the 1.27. So we're still above that 1 levels, which is quite that positive momentum continuing to build up. In terms of your F&O stocks that remain in the F&O ban, a whole host of them that continue to be there because there are no additions made for today, where the likes of an Aarti Industries, Aditya Birla Fashion, Balrampur Chini, Birla Soft, Hindustan Copper, LIC Housing Finance, Piramal Enterprise, Sun TV, all continue to remain in your F&O ban list. About 3 stocks that have come out of the ban list that include Bandhan Bank, Manappuram Finance, RBL Bank, as well as SAIL. So 4 stocks that have come out of your F&O ban list. Now, where the money flows are coming and going, FIIs, they remain net sellers, selling close to 799.74 crore worth of equity shares in yesterday's trade, whereas the DIIs bought close to 3,097.45 crore worth of equities is what transpired in trade. So that's where you're seeing who's doing the buying, mostly coming in from the domestic and retail space itself. But that does show that the India WIX, so the volatility gauge, continues its downtrend. We declined by another 3.5% odd. So now we stand at around 13.33 levels. So anything below that 15 is always a positive. On the higher side, that 14.6 could be expected to be that crucial mark of perhaps turning the trend around in favor of the bears. So we need to be below this 13.5 levels of where we are currently right now. So that gives us some bit of understanding of how the markets are placed at this point. But let's get discussing what kind of stocks you need to be watching out for and what's on our experts' radars as well, and how one could be trading in this market. Joining me is Aamar Singh, the Senior Vice President at Angelone. Aamar, we meet again this week, but it will be interesting to see. We've seen quite a bit of swings. I think when we met, we were still around the 24,500 levels. Now we've gone past that next resistance of 24,700. Do you think it's only an upward trajectory from here, and this 5 days of consecutive wins, that streak likely to continue?
Yeah, very good morning, and thank you for having me on the show. So, see, what we are seeing is that we have to look at it from a wholesome perspective, wherein we are seeing that the global markets have also been very positive. The Dow Jones has also been trading very strong and firm, and that's definitely lending strength to our domestic markets as well. And that is being reflected in the way Nifty has taken out, because earlier we were talking about the 24,500 level, 400-500 zone of resistance. So that's been taken out quite well, and currently is trading significantly higher. Having said that, if you look at the charts of Nifty, I've been always saying that the long-term trend has been positive, very strong. Intermediate trend is also positive. Short-term, we did witness some consolidation, but now the short-term trend is also turned positive. So having said that, if we go back in time on 31st of July, Nifty had made a high of almost 24,984, roughly you can say 25,000 levels. So that's within striking distance. And today also being weekly expiry, so I wouldn't say that we would touch that level today, but it's very likelihood that the way the US markets and the momentum has been building in global markets on the back of expectations of rate cut by the US Fed in September. So that's definitely aiding the markets. And also, if you look at some of the large heavyweights, they've also been quite supportive. But primarily, if you look at Kotak Mahindra Bank, that's on the positive side. Infosys, TCS, they've been quite strong. Reliance is also trying to inch up its trading above the 3,000 level. So that was a zone of resistance. And HDFC Bank is still, I would say, a cause of concern. That's the reason we are not seeing some significant up move happening in the Nifty bank. So because till that time we don't see HDFC Bank sustaining above the 1660, 1670, it could consolidate.
So So you are waiting to look at the likes of an HDFC to start performing, and that's when you're going to see some change in the Bank Nifty. Is that what you're suggesting? And within the Bank Nifty, how is one supposed to be looking at it? Because we've been seeing financials be quite a drag of late. They've been having their days, on and off days, but within that space, how is one supposed to be trading, especially if you look at the Bank Nifty, that 51,000 levels somewhere close, or we should wait for some more consolidation and then look at that index?
I would say there's definitely some positive trend seen in Bank Nifty as well, because it's very clear that Bank Nifty for the time being has formed a base. So the recent lows are very strong support base for Bank Nifty, no doubt about it. Anywhere between 49,000, I would say 600, 800, that's a very strong support zone. Bank Nifty is up almost 1,000 points from there, but it needs to sustain above the 51,000 mark. That's very important for any meaningful rally towards 50, I would say 51,500, 600 sort of up move. So that's the level to watch out for. Otherwise, I would say it needs to sustain above, and for that, as I said, because HDFC Bank has a major weightage, so it also needs to fire up. ICICI Bank is comparatively quite strong on the chart. It's also a heavyweight. So from that perspective.
Right. Well, in fact, let's address market open then for you. You're seeing on your screens there, the Nifty, Bank Nifty, all of them, a good sea of green, we could say. We are starting off this morning, even though we were, of course, anticipating that the handover that we got was quite positive. So you're looking at 24,800 levels for the Nifty right at open. The Bank Nifty also a good 150, 180 points that you're seeing. The Bank Nifty also propped up. Sensex managing to conquer that 81,000 levels, in fact. So that a good positive for the benchmarks, at least we can see at this point. The mid cap and broader end of the markets also mirroring pretty much in tandem, we could say, with what you're looking at the Sensex and Nifty, both of them gaining close to those 50 to 100 points that we're seeing right at opening bell. But let's also look at sectorally, which of these indices. I think most of them are quite positively propped up there, you can see. But I think barring the Nifty Realty Index at this point, I'm seeing most of them in the green, at least at opening bell. So you are quite, most of your sectors, and especially even the IT pack, are all in the positive. So barring realty for this moment, we are looking at most of your stocks, even the advanced decline showing pretty much in favor of the advances. So let's look at which stocks then are contributing towards this good, the positive that we are starting off this Thursday morning. So the gainers on your screen, there are quite a few of them. I'm seeing very few laggards in trade compared to the gainers. So you're seeing the likes of you're seeing quite a few companies that are there. In fact, it will be up there on your screens in just a bit. You are looking on stocks like how we were talking about, just the banking pack, and also metals pack. So you're looking at and BPCL, which continues to be in your gainers. There's the likes of a Hindalco, even the likes of a Tata Steel, ICICI Bank being among the banking things that are among your gainers, whereas on the flip side, your losers include the likes of a Power Grid, Dr. Reddy's Lab, the likes of an NTPC. So you're seeing a couple of power names there among your laggards, as well as Britannia and Shriram Finance. Shriram Finance and those were among your on previous two sessions, they were among your gainers, but now you're looking at perhaps some profit taking that is taking place. But interesting to see a couple of metal names there that are among your gainers again today, the likes of Hindalco and Tata Steel making it to the top gainers. But besides all of this, I think the one stock that is on everyone's mind and one wants to know more about is in late last evening we got to hear about Zomato and the fact that they've gone on to sign a deal with OCL, WEPL and OTPL. Now, who are these three companies? These include the likes of, OCL, which is your 197 Communication, the parent of PayTM, then OPTL, which is Orbigen Technologies, as well as WEPL, which is Wasteland Entertainment Private Limited. Now, these three companies will go on to form together something that is called the Going Out business. Now, this is going to be acquired. This is the entertainment ticketing, or what we know as PayTM Insider, to the common man or on your apps is what you look at. That will be bought for around 2,048.4 crore rupees, and this will be the whole transfer that will happen into the movie ticketing, the sporting event. All of that will now come under this one umbrella. That Zomato is going to take over, of course, and it will also be, there'll be a more infusion that Zomato plans on doing into this new vertical that they will be looking at. So it will be interesting to see how this pans out. A lot of brokerages that have come out with their notes on this. Bernstein continues to have an outperform call. In fact, after UBS initiated that call on the likes of Zomato earlier this week, we've been seeing, good rally up. We did see some bit of profit taking as well at the highs. But, the likes of Bernstein has a target of somewhere around 275 rupees per share. They're looking at this whole PayTM ticketing business acquisition to further expand the TAM for the company and also get into the whole events ticketing business, which will be part of their new app. New vertical in this front. It is expected to launch in a couple of weeks formally under Zomato's app, which is what we're going to be looking forward to. But also that the fact that the company does have a strong track record of successfully acquiring consumer tech businesses. And we saw what happened with Grofers and later Blinkit, which came to be known. And now it's pretty much one of their bigger sources of revenue, what Blinkit has, turned around for Zomato. And Nomura too has a buy call with a 280 target price for Zomato. They do believe that the management will help in turn around this whole ticketing business and will focus on newer areas. It does expect to raise the GOVs for the company and also increase their gross order value from 3,200 crore rupees in FY25 to about 10,000 crore rupees by FY26. So in 2 years, that's the kind of jump they're saying that they're going to look at for Zomato. Let me get in Aamar. Aamar, how are you looking at this news, of course, but also the fact that it has both of these startup or new age tech companies that are involved here, both of them having their separate ways that the charts have taken or their stocks have performed over time. But how would one look at a Zomato vis-a-vis a PayTM? And of course, they're two different businesses altogether. But if one were, if a retail investor were to be looking at it and saying, okay, today I want to put my money in one of these new age tech stocks, how would you be, pitting them against each other, and which one does look more attractive?
Yeah, if you look at Zomato has been on a tear. It's been a multi-bagger because it's from almost 50 levels. Currently, it's around 262, and 50 was in, I would say, February last year. So it's within a year and a half, the stock has rallied by almost 5x. And the long-term trend definitely remains positive. So for an investor who's looking from a long-term perspective, they can look at Zomato. On a dips, it could be an SIP mode. That would be more appropriate, because what happens is that if you buy at record highs and market corrects, so you are stuck with the stock. So that's one way one can look at. And looking at the other stock which you mentioned, PayTM. So PayTM had its own share of struggles, and still the stock is far off from its highs, because the stock from almost 1950 currently it's around 600 odd levels. So it's still less than 1/3 of the price that it got listed at. So, but now it's really showing some signs of strength. So from a short-term perspective, yes, there is an opportunity in PayTM that the stock could rally, but it needs to sustain above the 600 level. That's very important. Sustaining of the 600 level, one can expect a 15% or so rally in the stock.
Right. So wait for that 600 levels for PayTM, and then you can perhaps see some opportunities there. But in fact, talking about that, Paytm's board of directors has also decided to opt for a significant revision in their salaries. So they are going to be taking cuts of sorts, we would say, where the non-executive independent directors, their salaries, which were set at about 1.65 to 2 crore, that under the revision, their remuneration will be, the compensation, annual compensation will be restricted to just about 48 lakh rupees in the fixed component, as well as 60 lakh in their, in the revised on the variable pay, which will be effective from 1st of April. So it will be quite interesting that Vijay Shekhar Sharma is really, trying to see where all he can clean up the books for Paytm, for that matter, and then, make it more, bring it on those lines of profitability. Aamar, let's also get going and answer a couple of queries that are coming on our feed now, because, then we often do not have enough time to answer all of the queries that are coming in. So let's get going. Let's take up first, since we are talking about realty and how those stocks were the ones witnessing some bit of pressure. Satya CK wants to know your view on Kolte Patil, and if you have to, maybe give him an alternative. He's asking between Kolte Patil versus BL Kashyap, which one is better? So how would we place these realty stocks for him?
If we look at the realty stocks, Kolte Patil seems to be better in the sense that the stock has corrected, because if we go back, the stock has corrected from almost 600 levels. Currently, it's around 400, and we are seeing that the stock is on a very crucial support zone. So it seems that the stock has formed a base, and the stock now needs to sustain above the 400 odd levels. So there is an opportunity in the stock, but that window of gains could be limited. So that one needs to bear in mind. In most of the reality stocks, that's what we are seeing, is that it's more from a trading perspective rather from an investing perspective, because the long-term charts have also, for Kolte Patil, they are not very positive. And since they are in oversold territory, we could witness a bounce back, but that's going to be temporary. So from a trading perspective, makes sense. Otherwise, one should wait out.
Right. So look at it only from a trading perspective and not, long term. You can still wait it out on Kolte Patil. Another one that is coming in, Pooja Khanna wants to know your view on Alok Industries as well as IndusInd Bank. She says she holds both of them, but right now running at a 6 to 7% loss. So what would be advice for both of these stocks? Should she be waiting or holding on or selling at this point?
Alok Industries, so she should definitely hold on, because the stock is seeing some very good traction, and yesterday's high is now going to be very important. So that was 29.30, and recently also we did see the stock rally towards 30 odd levels, and from there it had corrected all the way towards 24.25. So one can hold on to Alok Industries. Sustaining above 30, we could expect a sharp rally in the stock, anywhere between 10 to 12% rally. So one should hold on to the stock. The stock has a very strong base around the 25 odd levels. And looking at the other stock which you mentioned, IndusInd Bank. So if I look at IndusInd Bank, here what we are seeing is that IndusInd Bank is very crucial support zone. So that's the reason we are seeing the stock bounce back from 1340 levels, currently around 14 odd levels. So again, this is from a trading perspective. You can look at this stock, because on the higher side, the stock has got very strong resistance coming around the 1450, 1460 zone, because the long-term or the intermediate-term trend continues to remain bearish. So from that perspective, one can look at IndusInd Bank from a trading perspective.
Right. So all of these more trading calls and not long-term investment ideas is what Aamar is suggesting at this point. But there's another stock that will be quite a buzz, and this is none other than Indigo. The largest carrier that we know, low-cost carrier. Jefferies has an upgrade on this particular one with a buy call, and the target being raised to about 5,225 rupees per share from earlier what was just 4,400. So they're looking at a good upside for this one. They're saying that the company's operating performance has consistently surprised in the past, and the 12 to 18 month in the past 12 to 18 months, they have raised their spreads for the estimates of their EPS, at least, or earnings per share, by 6 to 7% for FY 26-27. HSBC too has a buy call on Indigo. Their target price is somewhere around 5,165 per share. The whole fact that Indigo has now ventured into the business class of things with the launch of that, it ends that monopoly that Vistara or Air India had into that business class segment with their new Indigo Stretch program. And now with continuing with their loyalty programs, a long, strong network, as well as the corporate market share that it holds, this could go on to support that premium product that they have gone on to launch. So two positives coming in there for Indigo. That stock, of course, reacting as well to what this news has come in from both these brokerages. Quite a positive there for Indigo. Let me get back on Aamar. Let's get a couple more queries answered then. Let's get Kishore. He wants to know your view on Zensar Technology, the holding time. He's been holding it for some time, but he asking whether he can be adding at the current rate. Does it still make sense for him to be going on to accumulate more of Zensar Tech?
Yeah, I would suggest, as far as Zensar Technologies is concerned, overall the trend is very strong. There's no doubt about it on the long term, on the intermediate term trend. So he should definitely not look at booking profits. But at the current levels, I wouldn't recommend buying, because from a short term perspective, we are seeing that the stock is now getting into a consolidation zone. So effectively, if you go back in time, so on 15th of July, the stock had made a high of 840 odd levels, and then it has been consolidating. It has pulled back over the last few days, but I wouldn't recommend fresh entry at the current levels. Rather, one should hold on to the current positions. If you ask me about the levels to watch out for on the downside, the stock has got very strong support coming around the 750 odd levels. So holding onto the current positions and not adding fresh is what I would advise.
Okay, so don't add fresh on a Zensar Tech, and maybe you could, hold on to what you have. Don't book profits either. Zulfikar Sarkar wants to know your view on PCBL. He says that he bought it for around 392, and what would be that level that he should perhaps look at selling it? So what is the chart really suggesting for the likes of a PCBL?
If you look at PCBL has been significantly on an uptrend, and the trend is very strong on the long term, on the intermediate term charts, and even from a short term perspective. And there was significant volumes on the breakout when the stock took off from almost the 340, 350 levels. Currently, it's around 450, 447, 448. So what I would recommend is that he should look at booking at least 50% profits in his position, and the balance he can trail below the 374 level, because that's a very, or below the 370 level, because that's a very strong support zone for the stock. So in case the stock witnesses a significant rally, because if you look at the stock in this quarter itself, the stock is up by almost 75%. And the stock has witnessed a one-sided rally. So for 50%, he should book the profits, and 50% for the balance, he can trail it below the 370 level and see how it performs going forward. On the upside, the stock could rally towards the 480, 485 levels.
Right, another good brokerage note that is coming out, and quite a positive buy initiation, is from UBS on the likes of a Shyam Metallics. Now they've kept the target price of somewhere around 1,200 rupees per share for the company. Shyam Metallics is pretty much been on that high growth trajectory ever since, and they're looking at that, the fact that they are looking to diversify their products as well as get into more different kind of metals as well as backward integration. It goes on to capture the efficiencies. It says that the company does stand out. It could be successful into the forays that they're making into the many new businesses, as well as that execution capabilities is what they think will actually go on to help the company. They do see that the market is not fully appreciating that integrated operations such as their internal sourcing, and that once gets factored in, will augur quite well for the likes of Asham Metallics. Well, a couple more queries that I'd like to take in and also get Aamar's chosen picks or what he has on his radar. But before that, let me get the likes of a Nykaa. I think that one took everyone by surprise yesterday, hitting that 52-week high. But the company also coming out and showing it through its number of store additions, as well as how the stock has been quite a turnaround that we are seeing in the numbers as well. What would you suggest for the likes of a Nykaa, and how if one is looking at new age tech stocks? We did speak about the other two, but for something like a Nykaa, is there a value still, or is it overpriced and one should be waiting it out?
See, if you look at Nykaa, again, more of a PayTM-like story, what we are seeing there, both on the fundamental as well as the technical side. So I would suggest that the way Nykaa has rallied, it's up by almost 20% this quarter itself. And from the lows, the stock is up by almost 90%. So yesterday's high is something which is very important, very crucial. So I wouldn't recommend buying at the current levels, though the structure of the stock is positive, because there were significant volumes and the high of yesterday was around 228 odd levels. So only above sustaining of the 228, 230 can you expect the stock to rally towards the 250 odd levels. Otherwise, the stock could witness some sort of consolidation. But yes, the downtrend seems to be over for the stock, and the stock has now got strong support coming around the 180 odd levels.
Right. What about the likes of, your Titan or even Kalyan Jewellers? Today there is news from Kalyan Jewellers also that there could, possibly be a block deal that could happen, and, pairing of stake that we might likely to see. But if you have to choose between these jewelry brands and consumer, discretionary names, how are these placed, and what would you really suggest, or what the chart's really saying for the likes of a Titan versus, any of these other Senco or Kalyan Jewellers?
So first I'll talk about Kalyan Jewellers. See, Kalyan Jewellers has definitely been very strong on the charts, no doubt about it, from a long-term perspective, intermediate-term perspective. Short-term, however, we are seeing some sort of consolidation and also profit booking happening in the short-term charts. So the stock had made a high of 633 on 24th July, and then the stock has gone in for consolidation. And it appears that till the time we don't see a breach above the 630, 640 zone, the stock would consolidate in a narrow range. So on the downside, it will be somewhere around 560, and the upside would be around 640 or so. So it's more of a trading play for Kalyan Jewellers. So I would say that one should look at it from that perspective. On significant corrections, yes, that could be a buying opportunity because the trend is up. Looking at the other stock which you mentioned, Titan. So if I look at Titan, see, Titan is definitely one stock one can always look at adding to one's portfolio from a long-term perspective, more on an SIP mode. Having said that, what we are seeing technically on the charts is that the stock has been consolidating for the last 3-4 months. Now it's trying to take off. It's breaching important zones of resistance. So the stock ideally needs to sustain above the current level. So 3550, 3600, that's a zone of resistance for Titan. If it takes that out, we could witness some upside rally, but the momentum has been lost in Titan for quite some time, and that's not going to come back easy. So till the time it sustains above the 3600 level, then we could say that now the momentum is returning. Otherwise, again, it could be some sort of consolidation. But currently, from an intermediate short-term perspective, it has a positive bias.
Right. Aamar, are there any stocks that you are keeping closely watching out for, and that you would like to recommend for our viewers today?
I would say one stock from this pharma space is Panacea Biotech. This is one stock which has been performing quite well. It's up by almost 55% this quarter, and recently the stock has witnessed some strong up move. So technically speaking, it has taken out some very crucial zone of resistance. But since the stock has rallied because of the last, I would say since 12th of August, from 133, the stock is up by almost more than 50%. So on any correction, one can look at an opportunity, buying opportunity. The stock needs to sustain above the 200 level for any meaningful rally towards the 240, 250 levels. The crucial support for the stock is around 180.
Right. In fact, we did speak about insurance companies earlier as well. But there are a couple of queries that are coming in. One on HDFC Life. This particular viewer wants to know whether he should keep a target of around 785 and for a holding period of 1 week, and also a view on LIC India. If we're talking about insurance companies, then how is that one also placed? So both HDFC Life as well as LIC, how are those charts looking?
So HDFC Life, he should definitely hold on to it, because HDFC Life earlier wasn't able to breach the 700 and 710 levels. So now it's sustaining above that level, and also on the charts, the stock is promising. So yeah, from a short-term perspective, it's not very trending, but from an intermediate and long-term perspective, the stock has gained momentum. The key is sustaining above the 700 level. Sustaining of the 700 level, the stock could rally, because it's all-time highs. If I go back, that was around 775 in the quarter of September 2021. So sustaining above 700, we could witness some sharp up move in this stock. And looking at the other stock which you mentioned, LIC, we are seeing some sort of profit booking there. So on the intermediate term trend also, the momentum has declined. So this stock is now going in for consolidation between 1,000 and 1,200. So that's the range for LIC. Doesn't seem likely that it's going to breach these levels anytime soon.
Right. So both these now into consolidation mode, we could say HDFC Life as well as LIC. I hope that answers the queries that have come in. But at this point, let me also thank Aamar Singh for joining us, helping our viewers with their queries, and giving us an understanding of different sectors and stocks that are seeing these kind of moves and swings, and where you could be adding or removing from your portfolio. Thanks so much, Aamar, for giving us your time and speaking with us here at Moneycontrol.
Thank you.
Well, and to all our viewers as well, the markets right now poised quite, we would say, flat at this point, but with that slightly green, a shade of green, we would say, but just about 0.2% both for the Nifty as well as Sensex, managing to hold on to those 24,800 levels, and as well as 81,000 on the Sensex. So we'll have to wait and see through the end of trade whether the benchmarks manage to hold on to the green, or there would be some bit of profit taking at the highs, as we would say. But we are keeping our focus for the Nifty at least towards that 24,800 or 850 odd levels, and if it manages to hold on to that, then there could be that further up move towards even 25,000. But for now, that's where we stand with the markets. Good sign of green, and pretty much what even the markets overseas had for us in the handover. That positive, waiting anticipation of the rate cuts is what has kept everyone quite cheerful, we could say, on Thursday. Whether this will continue, we'll have to wait and see to the end of trade. But for now, it's a thank you and goodbye from the entire team that puts this piece together. Thanks so much for tuning in every morning, also sending us all your queries, and do keep writing to us so that we have them addressed. And if they weren't addressed today, come back tomorrow, because we'll try and have our expert tomorrow to get you answers for those stocks that you would like to add into your portfolio. But for now, it's a wrap and goodbye. Thanks so much for tuning in. I'll be back again here tomorrow.